So today we're going to be talking about the top 5 Vanguard ETFs, kind of what they include and which one might actually end up working out best for you and your investing style. So what we're going to do is actually hop on a website called seekingalpha.com, and we're just going to break these down just a little bit here today to hopefully help you get a better understanding of these different ETFs. Now, obviously, when we go over this is not financial advice. This is just kind of helping you break down and have a better understanding of which one might be the best one for you. Now, the first one we're going to be talking about today is called the Vanguard S&P 500 ETF. Now, its ticker number is VOO, and as of this recording, you can see its trading price is 362.18. Now, overall, what we're wanting to look at is, what this ETF actually includes and if it's something that's worth it for you. Now, the first thing we want to really do is look at its expense ratio, because this is going to have a play factor in, which one will go well for your portfolio, because some of these are going to have higher expense ratios, just essentially how much it's going to cost you to have it. This one has a 0.03%, which is relatively low in comparison to some of the other ones. It does pay out a dividend, which is quarterly, so every 3 months you will get a payout for having ownership of these funds, as well as the yield, which is at a 1.51%. Here's going to be the biggest thing when it comes to choosing this one over any others. It's going to be in the holdings, and this is where we're going to break down most of every single fund here that we're going to be talking about today. So in this holding, you can see that there is going to be, the most important thing is going to be actually down here for most people to understand. There's over 508 holdings in this account. Granted, it's called the S&P 500 index fund, but it has a little over 500. And what this helps a lot of people do is get diversified in what they're invested in. And you can see here in the top 10 holdings, all the companies that will be part of this. Most of these you will most likely already know, such as Apple, Microsoft, Amazon, Tesla, and even Google themselves as well in this fund. So for a lot of people, these are going to be the companies you most likely want to be investing with anyways. And what having this fund versus buying these stocks individually is it gives you diversification. As you can see here, this is going to show you how it's actually diversified. So you can see about almost 25% of this portfolio is in technology. You can see about 15 or 14% in healthcare, and then about 13% in finances, and so on. So this is going to help you actually be diversified in what you have invested in your account. This is great for somebody who is wanting just kind of follow those top 500 companies and see some really healthy growth. If we go into our summary here, over the last year, obviously with the markets, sometimes it can be down, but if we go over the last 5 years, you can see it's increased about 63.2%, and you can see over the last 10 years, it's 208% increase. Now, the next one we're going to be talking about is fairly close to this one as well that we just looked at, and this is called the Vanguard S&P 500 Growth ETF. So the ticker number on this one is VOOG. So it just adds one extra letter to that ticker number, and its current price as of this recording is $222. Now, we mentioned we want to talk about expense ratios, and this first one is 0.10. So this is significantly higher than the other one previously, almost about 3 times higher in expenses, but that might come with some additional benefits that we can look over here in just a moment. Now, it does also pay a dividend quarterly, so every 3 months you will get a dividend, and its yield is 0.77%, so a fairly lower percentage than the one we were just looking at prior. Now, let's go ahead and take a look and see which companies this one holds here in this fund. And you can see in the top 10 holdings right over here, you're going to have very similar companies: Apple, Microsoft, Amazon, Tesla. All of these right here are pretty much the same. You can see a few different ones like Facebook and Home Depot are higher on the list in this one. And over here in the total holdings is 243. So this actually takes some of the top holdings in the S&P 500 and essentially just focuses on those ones, giving you potentially more growth opportunity, but obviously a little bit more risk when it comes to the stocks going down from this holding. That will bring it down faster than the other fund we were just talking about. So you can see here, part of the reason for that is that technology now takes up even greater percentage of this fund, which means you are going to see a lot more of that volatility up and down in the market. And then you can see consumer cyclical is actually the next one on the list, and then healthcare is going to be third after that, and so on and so forth, and which means you're going to again see those volatilities in the market. Now, if we go back to that homepage page here, and then we take a look at its performance over the last 5 years, we can see it's grown about 80% over the last 5 years, and then in the last 10 years, about 257%. So if we compare that to the one just prior to that, it's 208. Again, you're seeing a bigger increase when it's going up, but you will definitely see a bigger decrease when it is going down because of that heavy focus on technology. Now, before we actually continue on with the rest of this list, if you're somebody who wants to actually invest in any of these ETFs, one of my favorite platforms to do it is M1 Finance, which is this platform right over here. And this platform allows you to essentially just invest without really thinking too much on a day-to-day basis. You just put your money in, pick your funds, and then just have it auto investing for you. And you can actually go through and choose most of the funds that we're talking about here today. And if you want to get started with M1 Finance, I will have a link for them in the show notes down below. Helps you get started right away, plus a nice sign up bonus for using my link, and helps support out the channel so you get more free content just like this. And as I mentioned, if you actually go into the research tab, you can even see funds. You can see a ton of Vanguard funds that you can choose from. So there's more than what we're going to be talking about here today, but those options are going to be available for you nonetheless. So next up on here is going to be the Vanguard Total Stock Market ETF. This one is ticker number VTI. So as of this recording, it is going for 196.67. So first thing we want to look at is the expense ratio. This one is at the 0.03, so similar to the very first ETF we were talking about. Also pays out on a quarterly basis, so every 3 months. And you can see its current yield is at 1.49%, so a fairly solid yield for those that are wanting to earn a little bit of dividends in the process as well. So let's take a look at the holdings over here. And the first one we want to note is the amount of shares or amount of holdings in this fund right here. 4,115 holdings. Essentially, it is the entire stock market all in one. So when the market's going up or the market's going down as a whole, you're going to feel that same effect with this fund. And you can see the top 10 holdings here, close to what we've been seeing before: Apple, Microsoft, Amazon. You also got like Johnson & Johnson over here as well too. So a lot of the same companies, because again, they are some of the top companies in the stock market. But you can see here, technology is about 24%, similar to the first fund we looked at. But then we got healthcare in second, and then also financials in third at 13% of the overall holdings. So you're going to see a lot more diversity in this fund than most other ETFs you're going to be able to get into, just because it pretty much holds everything available for you in the market. Now, if we go to the summary and see how it's performed, if we look at the last 5 years, it's gone up about 58.46%, and in the last 10 years, close to 200% in the overall market. Now, again, this is a great one for somebody who doesn't want to think about anything else but putting their money in and having it available for them down the road. Now, next up here is going to be the Vanguard High Dividend Yield ETF. So this ticker number is VYM, and it's currently going for $108.27. Current expense ratio is 0.06, so about twice as much as some of the other funds we talked about, but not the most expensive. This pays out on a quarterly basis, and of course, because this is the high dividend yield, this is really focused on dividends, and you can see that by its current yield at 2.88%. So you are getting quite a bit more every quarter than you would be with some of the other funds, but of course that will come at a downside, and we'll talk about that here in just a moment. So let's go ahead and go to the holdings here, and let's take a look and see. So the total amount of holdings in this one is about 446, so you're still very diversified as a whole. But you can see here, in comparison to some of the other funds we were looking at, this is a vastly different looking set of top 10. And you can see Johnson & Johnson, Procter & Gamble, ExxonMobil, JP Morgan, Home Depot, and a bunch of other companies that most people have probably seen or heard of before, or even possibly use on a regular basis. Now, here's where it really differentiates as well too, is you can see that financials is actually number one as far as overall percentage of the pie here at almost 20%. Then you got healthcare, and then you got consumer defenses, and then everything else kind of rounding out the difference. Technology drops all the way down to only 8.5% in this fund. So for some people that might be helpful, so that way you don't see as much volatility in the market as you do with some of those other ETFs that we're going over as well. So you're not going to see as big of highs, but you're not going to see as big of lows overall. So if we look at the last 5 years, you're seeing just the price performance at 39.06%. And then if we go over to the 10-year, you're going to see a growth of 139%. So definitely not in the same league as some of those other ETFs, but if you're somebody who's maybe getting closer and closer to retirement or wanting to use your money, not having that big up and down swing might be more beneficial, and then getting those nice dividend yields on a quarterly basis might be the option for you. Now, on this next one over here, if you're somebody who wants to actually focus on dividends for the long term but not need them today, they actually have one called the Vanguard Dividend Appreciation ETF. So ticker number is VIG, and it's currently going for $148.63. Now, its current expense ratio is 0.06, which is kind of that middle of the road expense ratio here. And you can see that the dividend frequency is on a quarterly basis, and the yield is 1.92%. So it's not as much as the other one prior, but this one is actually focus on companies that are increasing their dividends at a pretty nice rate year over year, because what happens is a company can choose to increase how much they're paying out holders a little bit more every year, and these companies tend to do that at a pretty rapid rate, usually anywhere from like 10 to even 15%. So as far as holdings, this one actually has some of the lowest numbers when it comes to holdings at 292 stocks. Now you can see in the top 10, we got companies like Microsoft, United Health, we got JP Morgan, Visa, even MasterCard and Pepsi are also on this list. So you got the breakdown here, you got finances at almost 20%. You got technology closer up to 16.5%, and then healthcare rounding out the top three at 15.82%, as well as some of the other breakdowns there for you as well. Now, if we go look and see how it performed over this last little while, you can see in the last 5 years, it was about 60% growth on the fund there. And then in the last 10 years, it's been 172%. So you have a lot of variety when it comes to all these different funds, because they all attain different goals for different types of investors. Now, what I want you to do next is actually continue to learn and grow when it comes to going through this investing process. So check out my next video right over here on screen. My name is Dennis, and I want to help you in that next video.